Have you ever watched the stock market and noticed how quickly things can change? 1 minute prices are soaring and next they're plummeting. But what if I told you the same kind of dramatic shifts happen in the mortgage world? That's right, and it can affect everything from your mortgage rate to the overall health of the real estate market. Are you curious about what's on the horizon for mortgage rates in Ontario? Well, let's dive into some of the economics and make some predictions. This week, we've seen the financial equivalent of a roller coaster in the bond market. Now, you might be thinking, bond yields? How can that affect my mortgage? Well, bond yields and mortgage rates are like dance partners in the world of finance. When one moves, the other often follows. The 5-year Government of Canada bond is a key indicator, and it just took a nosedive of over 30 basis points, landing at 3.79. To put that in perspective, it's a staggering 60 basis point drop since its peak in October. Now, what does that mean for you? Well, I'm glad you asked. Here's the scoop. Mortgage rates could see a drop as early as next week. That's right, experts are forecasting a slight sigh of relief for anyone shopping for a mortgage or up for renewal. But let's set the expectations right. It's not going to be a one-to-one match with the yield decrease. As the old adage goes, rates take an elevator up and the stairs down. So while the bond yields took the express elevator to the basement, rates will likely descend more gracefully, possibly around 20 to 40 basis points over the next couple weeks, depending on your term. But why won't rates fall as sharply as the yields did, you might ask? Well, lenders are a cautious bunch. Especially with whispers of an economic downturn in the wind, they're keeping a cushion on their rates to weather some potential storms might be on the horizon. History has shown us that a proactive stance in action before, like the choppy waters of March of 2020 and the 2008 financial crisis. All eyes are on the economy now, with every new economic report causing a stir. Inflation rates are easing, spending is slowing down, and there's a bit more chatter about unemployment. The markets are a little bit less confident about the Bank of Canada hiking rates. In fact, they're even starting to bet on cuts. Here's a twist. The Bank of Canada might even lower rates before inflation cools off to their 2% comfort zone. So what does this mean for you if you're looking to buy a house, sell, or even refinance? Well, timing is everything, and understanding these market movements is key in making savvy decisions. With rates potentially on the descent, it might be a prime time to get in touch with a mortgage expert, like me. My team and I, along with our preferred partners, will give you the local competitive advantage in today's fluctuating real estate market.